It's an exciting day. We're just minutes away from the close of the trading bell. It's been up, it's been down. Right now, the Dow Jones Industrial Average is up about 100 points. The NASDAQ is up 23 points. Percentage-wise, that's an even bigger jump.
You know what I would love? I would love if we had one of the horse racing guys who call it, and down the stretch they go. I mean, this has been that kind of day where we were down double digits and now we're up triple digits. And this has seen us through an intraday trading low of the day that we broke through, that was set back on August 16th. And then the market turned higher once we broke through that level.
So what can we take away from today's activity? Let's throw that back to our panel. I'm going to go to Nicole first because, Nicole, you've been relatively calm about this market, taking the easy side that, yes, we could go into a recession, but if so, it's not going to be a terribly deep and dirty one.
Well, I think my rationale is always that people are in for the long haul anyway. So, you know, if you want to buy on some dips, as Eric said earlier, and get in cheap, that's great, as long as you have the idea that you're going to hang on to these things.
Is that what's happening today, though, when we saw that down and then suddenly activity and the market going up, people were buying in the dips?
I imagine that that's definitely part of what's happening here. I think also a lot of conflicting reports. You know, you have the recession reports and then you have earnings to think about, and there's a lot on the plate right now.
Peter, we've seen a market that's been very volatile today. How do you play volatility?
Well, remember, this is a bear market. That's why you don't want to call it a correction, because a correction assumes that we're still in a bull market. So the corrections in this market are going to take the form of rallies. So whenever the market rallies, let's say it gaps up tomorrow to follow through with today's up move, instead of being exciting about it, people should take advantage of that gift to sell into it. The market is going a lot lower. And people have to understand that, so they know what to do. I mean, you say, well, people are in it for the long term. You can lose a lot of money in a bear market being in it for the long term, especially if you take into account inflation. You know, the bear market that lasted throughout the 1970s was brutal. In 1966, the Dow was 1,000. In 1980, it was still 1,000, but the consumer price index more than tripled during that time period. People lost a fortune waiting out that bear market. Don't make that mistake this time.
But, Eric, during the 1970s, we had some antiquated economic policies in place. We've changed things around quite a bit. We've had a tremendous increase. Hold on a second, Peter. We've had a tremendous increase in productivity. That is, the whole computer revolution has happened since then, so it's become a lot cheaper and quicker to make things than it used to be. So hasn't the situation improved since then?
Yes, we're more productive, we're more employed, and we have a Fed that's vigilant on inflation and freeing the system up, allowing the system to work. And they inject funds when they need to, and they take them out when they're able to, and the system works. And by the way, Peter, I remember you telling me we were in a bear market a long time ago, several thousand Dow points ago.
We have been. Look. Price the Dow in any other currency, price it in gold. This is a bear market. You've got to figure that out. You know, the difference between the 1970s is now, hold on, in the 1970s, we had a trade surplus. We did make things back then. We had a much better economy back then. Okay. We had a
better economy in the 70s when we had inflation
now.
in double digits and interest rates up close to 20?
Yeah, we have inflation at that level right now. We're just not reporting it accurately.
Okay, hold on.
If we had the 1970 CPI, you'd see it.
You're on. Can you make some comments here? Do you agree?
Well, what you're seeing here is the fact that there's enormous uncertainty about where this market is heading. There's enormous uncertainty in the markets about inflation. There's uncertainty about whether we're heading towards a recession or not. You know, whether we agree with Peter, it's what the market right now is expressing the fact that they don't know what's going on. And what you're going to see is continued volatility. You're going to see intraday movements like this frequently into the future, and you're going to see big movements down and up until there's more information, until it either settles in the doomsday scenario that Peter has, or it turns out to be something milder. Until we have more information, you're going to see a lot more volatility.
By the way, Peter, if you want to go back to the 70s, I understand Jimmy Carter is still interested in the job of the presidency. Maybe we could get him back in to run again.
Look, since 1999,
well, we might get a look-alike.
Since 1999, the Dow has lost 65% of its value priced in gold.
That
is a huge bear market.
One quick thing. What's the best time to buy stocks historically? Now.
I will be buying stocks when the Dow Jones, when I can buy the Dow Jones for 1 ounce of gold.
Okay,
that's
hold
when they're
on.
going to be
I want to
cheap.
go to Tracy. She's on the floor of the New York Stock Exchange. And Tracy, we've had a lot of movement here today.
It was actually a fun day down here. I don't think the traders will agree with me, but I thought it was pretty fun because there was news on top of news. want you to note, though, that the market turned around right about the time that Warren Buffett said that he would be interested in buying the insurers. And that's kind of when this whole uptick started again. Now, MBIA reacted a little, AMVAC reacted a little. It wasn't enough to carry those stocks out, but it certainly helped some of the other financials, which are now up. JP Morgan, Citi, those guys are in the green now. So there's something about the fact that the Oracle of Omaha speaks, market reacts. Basically, this means the market is looking for guidance here. It's looking for someone to say, we're done. You know, we talked earlier with Jeff Frankel about the fact that people are selling their mutual funds. Unfortunately, the average Joe is selling a little late, which is not surprising. This happens all the time. But maybe the fact that the average Joe is now selling is a sign that maybe we are almost out of this. And call it what you will, bear market, recession, whatever. This market is just a lot of little stories, and
Tracy,
you can find pockets somewhere.
We want to get the closing bell, so we got to say goodbye, but we'll be right back for that closing bell.
It's just around the corner. Stay tuned.